Hey there, fellow finance enthusiasts. Today, we are diving into the world of currency markets, specifically the euro to Japanese yen pair, which has been on quite a rollercoaster ride. But before we get into the nitty-gritty, let's set the scene. So, the euro to Japanese yen exchange rate has taken a dip, falling to around 182.00 after a brief rally. This downward trend is intriguing because it's being influenced by some technical indicators and broader economic factors. Here's the deal: the currency cross is trading below two crucial moving averages, the 9-day and 50-day EMAs, which often act as dynamic resistance levels. This suggests that the bears are in control for now. What's fascinating is how the Relative Strength Index, RSI, comes into play. With a value of around 37, it indicates a potential continuation of the downward trend, but not an extreme one. This is a subtle detail that many traders might overlook. It's like the market is saying, "I'm bearish, but not in a panic." Now, let's talk support and resistance levels. If the euro to Japanese yen continues its descent, it might find some solace at the 8-month low of 179.37, and if that doesn't hold, we could be looking at a 9-month low of 175.70. These levels are like safety nets for the currency pair, but will they be enough to catch it? On the flip side, if the bulls regain strength, the initial target would be the 9-day EMA at 183.16, and then the 50-day EMA at 184.71. But here's the kicker: if the euro to Japanese yen manages to break above these barriers, it could be a game changer. It might even challenge its all-time high of 187.95, which is a significant psychological level. But why is this happening? Well, the Eurozone's economic resilience is a double-edged sword. Strategists at BNY Mellon point out that recent data shows a surprising growth trend, which is great news, but it complicates the ECB's decision-making. You see, if the ECB tightens monetary policy too soon, it might stifle this nascent recovery. It's a delicate balance, and the markets are reacting to this uncertainty. In my opinion, this situation highlights the intricate dance between economic data and central bank policies. The market is trying to predict the ECB's next move, and it's a tricky one. Personally, I find it fascinating how a currency's value can be influenced by such nuanced factors. Now, let's zoom out and look at the euro's performance against other major currencies. The euro had a mixed day, weakening against the US dollar but holding its ground against others. This is a reminder that the forex market is a complex web of relationships, and the euro's strength or weakness can vary depending on its dance partner. In conclusion, the euro/JPY's recent dip is a story of technical indicators and economic nuances. It's a reminder that currency markets are incredibly sensitive to both short-term technicals and long-term economic trends. As traders, we need to keep an eye on both the forest and the trees. So, will the euro to Japanese yen bounce back or continue its bearish journey? That's the million-dollar question, and one that keeps us all on the edge of our seats. Stay tuned, because the currency markets never sleep.